Hello, everyone. I'm glad to welcome you to my online class webinar. I'm so excited to have you on board. Hey, my name is David Jenkins. You may recognize me from the Ultimate Fitness Camp. Well, after years of helping people improve their physical health and wellness, today we're in a position where we're blessed to help people like you get higher rates of return than you probably can get anywhere else. I've invited my friend and mentor, Jay Conner, the Private Money Authority, to be my co-host. How's it going today, Jay?
Well, hello there, David, and thank you so much, man, for inviting me to come along and talk about and present this information on private money and private lending. I'm excited to be here, man.
Glad to have you, sir.
I appreciate you having me here, David, and if you're ready for us to start, David, I will go ahead and jump in.
All right, let's go ahead and get it going, Jay.
All right, we're ready to go?
Yep, let's go.
We lost you a little bit, David. You sounded great starting out, but you're there in the background for some reason. But I think you said go, right?
Yes, go.
All right, here we go. Well, I want to also welcome everybody. It looks like we've got a good number of people here on the webinar, and I want to thank you so much for joining David Jenkins and myself. Of course, all of you all know David. But there's a good chance you don't know me, Jay Conner, so let me just take a quick moment and introduce myself and share with everybody how in the world I'm qualified to talk about private money and private lending. So my background is I'm located here in eastern North Carolina in this little teeny tiny town called Morehead City, North Carolina, small town. And my wife, Carol Joy, and I, we started investing in single-family houses all the way back in 2003. And from 2003 until 2009, we relied on local banks, traditional lenders to fund our deals. And in January of 2009, myself, like the rest of the world, we lost our lines of credit as real estate investors. I mean, it was like a spigot that was turned off overnight. And so I knew I had to find a better and quicker way to fund my deals. So I was introduced to this world of private money, again, back in January of 2009. And we've been working with private lenders ever since that time as being the primary source of funding our deals. So private lending and private money lenders has been the primary source of funding our deals all the way since 2009. As a matter of fact, in the first 90 days of us doing private money and private lending with private lenders, we had over $2 million in private money lending that we started working with private lenders on. Since that time, today, my wife, Carol Joy, and I have got 47 private lenders that we are doing business with, and they're from all over the nation. So David and I started working together quite a few months ago now. And so now David has now employed the same program that I have in this world of private money and private lending. We've done a lot of deals. Here in eastern North Carolina, we've rehabbed now almost 450 houses, the majority of which have been funded with private money and private lending. So just so everybody knows what to expect, this information and presentation, we're probably going to get it covered like within the next 30 minutes or half hour or so. But we want to have plenty of time for questions as well. All right, folks, here we go. Put on your seatbelt. We're going to cover some information rather quickly. So I'll tell you, folks, right now is the best time, at least since David and I have been investing in real estate. I go back all the way to 2003 to find deals. Now, you got to know how to find the deals. You're not going to find the single-family houses in the multiple listing service. I'll guarantee you that. This is a seller's market. It's a hot market. I mean, they fly off the shelf as soon as you get them beautiful and you list them in the multiple listing service. But David and myself and the other people that I work with, we've got some pretty cool creative ways that we find the deals. And most of the deals that we find are all what we call off-market deals. These houses are not in the multiple listing service. So we deal directly with owners of houses to find these deals. We do a lot of Google ads, Facebook ads, direct mail, reaching out to people in foreclosure to help them out of distress. So we're buying most of the houses of the deals we're doing at less than 50 cents on the dollar. Here's a couple of examples recently. Right here on Anneal Road, this house was funded with private money, profited $80,000 on this one. Here's one on Steep Point Road, funded with private money, profited over $77,000. And the reason we show you these kinds of profits, which are everyday profits, I mean, my average profit right now here in Eastern North Carolina is $71,000 per house. And the reason we show you these kinds of profits is because this is how that David can pay you such high rates of return safely and securely as his private lender. So again, these are very, very common profits that we enjoy and able to pay high rates. So first, let's go ahead and be very, very clear. Who or exactly what is a private lender? Well, a private lender is a person just like you that's attending this webinar. You can be a private lender. You don't have to go out and get an LLC. You don't have to go out and get incorporated. You as an individual, just like Carol Joy and I, we got 47 private lenders, individuals. It's an individual who loans money from either their investment capital or their retirement account, and we're going to talk about retirement accounts here in a few minutes. They loan their money from investment capitals or retirement accounts to a real estate investor such as your friend and connection, David Jenkins, and David in return is going to pay you very, very high, insane rates of return safely and securely. So it's a simple one-on-one transaction between you as David's private lender and David and his company with no broker or middle person involved. It's just the two of you doing business together. Now, when we say not a partner, what we're talking about is you as David's private lender would not be doing the deals together in a partnership, like setting up an entity as a partnership. You as the private lender act in the same capacity as a bank, and you get the same protection as a bank as well. So, David, let me turn it over to you to go over these big four reasons as to why your people here on this webinar could really be interested in doing business with you. David, over to you for this slide.
So, these returns which Jay alluded to, and we're going to compare these to your typical CDs or money market funds. I checked the other day, and they're paying a whopping anywhere from 0.1% up to like 0.81%. Those are like the top performing CDs percent. That's really paltry, less than 1% from your CDs or money market funds. So for those that just have money sitting in those funds that aren't getting those returns, we definitely can pay up to 20 times more than that. More importantly, there's no volatility, meaning that unlike the stock market, where you can put in 100 grand today and tomorrow your value drops or cut in half. Well, remember what happened back in 07, 08. With me, your principal remains the same because it's backed by real estate, and you earn reliable and certain interest rates, and it's steady. It's not no volatility. Your principal stays the same, and we already agree upon the interest rate up front, and we deliver on that. More importantly, you can get your principal back in case of an emergency. So that simply means that, say you decide to partner with me on an opportunity and an emergency comes up and you say, hey, Dave, I need my money back. If you give me a 90-day notice, we can get your monies back to you within 90 days. That gives us time to find another lender and put them in your place. Okay. And as we've already said, your money is secure and safe because it's backed by real estate, which is it's not going anywhere. It's a fixed asset.
So that's exactly right, David. And folks, I know David's got a bad connection, so just a quick little recap here. These 4 points. Number one, why are you interested in doing business with David? You're going to make a lot of money. You may not have heard him, but the local certificate of deposit in a bank is only paying 0.17%. That's less than 0.25%. He's going to pay you a whole lot more, and you'll hear what that is in a second. That second bullet point, you don't have to worry about anything coming out of your principal, like in contrast to the stock market. You know exactly what you're going to get, and there's no fees, there's no commissions. We got a way for you to get your investment back early prior to the note coming due if you need to. And again, as David just says, he's not borrowing unsecured funds. Now, he can legally, but in this program, every note that you will do with David is secure, and it's backed by the real estate, and it is safe because it's a conservative investment. And we're going to explain to you in just a minute about how it is conservative. Now, let's answer the question, how is it that David can pay you such high rates of return? Well, number one, we mentioned it up front, he makes huge profits. And the way he can make huge profits and pay you high rates of return is because he, just like me, is buying houses less than 50% of the after-repaired value. There's no broker, no middle person involved. And in this market today, David, like myself, is able to sell at full and above appraisal price because the market is so hot. But guess what? Even in a slow market, we have a way to also sell homes very, very quickly, and that is because of our rent-to-own program where we actually help people get ready for a mortgage that doesn't have the credit scores today. And then we're able to get properties occupied very, very quickly, which reduces carrying cost, increases David's profit to where he can pay you super, super high rates of return. So, David, how about go over this next slide and talk about, since we now know why they're interested, answer the question, why in the world is it that you, David, are interested in doing business with these potential private lenders on this webinar versus you just going to the local bank and borrowing the money at the bank?
In short, speed, Jay, meaning that if we go to a typical bank, the underwriting process and everything sometimes take 30 to 45 days, and that sometimes could cost us a deal. So what we'd rather do is do it with private lenders because with you and our attorneys, we can close within 7 days. That's really fast. Okay. Also, we can do an unlimited number of deals. Jay mentioned how the banks cut them off a few years ago. Well, with private lenders, we can do as many deals as the lenders that we have, as opposed to the bank saying, hey, I'm only going to lend you up to a certain amount and cap you. So it's unlimited. And most importantly, we can negotiate more profitable deals since we can move a lot faster. Once again, if we can close within 7 days, that gives us opportunity to help more people, solve more problems, especially people that may be facing foreclosure or other life-changing situations.
Excellent. All right, so now let's take a moment and talk about where can you all, as David's new private lenders, where can you all get money and funds that you have access to do business with David and fund his deals? Well, the first four that we have here on the PowerPoint presentation, you're familiar with for sure. Obviously, if you have funds in a certificate of deposit, money market accounts, savings accounts, any kind of liquid or investment capital, of course, you know exactly how to tap into that. But there are three other places here that I want to share with you to where you can have funds available that are yours to do business with David, and these are areas that you just might not have been heard about or not familiar with. So let's first talk about this really cool thing called self-directed retirement accounts or self-directed IRAs. Well, check this out. The IRS has approved a few companies in the United States. And I tell you, folks, when I first started doing business in this world of private money back in 2009, prior to that, I had never heard of self-directed IRAs, had no idea what in the world they were. Well, here's what a self-directed IRA is. If you have current retirement funds, all right, it may be a 401k that you've got somewhere, or it could be a pension that you've got somewhere, or it could be a retirement account of any kind that you had with a previous company that you worked for as an employee. Or you could be working with for an employer right now that has a retirement fund, and if you've been there long enough, they may allow you to move a portion of it over to a self-directed IRA. So David's got two different self-directed IRA companies here on the screen that are approved by the IRS. Advanta IRA, David's got experience with. Quest Trust out in Houston, Texas, I have experience with as well. Well, here's the way it works. If you have these current retirement funds, you can penalty-free and tax-free move a portion or all of your retirement funds over to an IRS-approved self-directed IRA company such as Advanta or Quest Trust. You move the money over there. Typically takes about 2 weeks to 4 weeks to get the money moved over. And again, these are your current retirement funds, a portion of them or all of them. You move them over, no penalty, no taxes. And then guess what? You can then loan money to David and his company from your retirement funds that you've moved over to one of these two self-directed IRA companies. You loan it out to him and fund a deal with him or deals with him. And guess what? You can earn an unlimited amount of money and returns per year, penalty-free, and at least tax-deferred, if not tax-free. Now, for example, I've got one private lender that's earned as much as $65,000. Just one of our private lenders has earned $65,000 in 1 year, tax-free. So it's like if you've got a Roth IRA in place, you move the Roth IRA over to one of these self-directed IRA companies, you can earn $1 million a year if you want to, tax-free. That's because you already paid the taxes on it when it was moved into the retirement account. So here's the bottom line, folks. If you have retirement funds, now this is all in addition to your investment capital and liquid funds and all that stuff. But if you have retirement funds, and you're not happy with the returns, and you want to really get some high rates of return safely and securely, you want to have a conversation with David after this webinar, confidentially, one-on-one, and he'll get you questions answered on that. He'll get you introduced to his connections at either Advanta or Quest Trust. Get your questions answered there, and then you can move the money over. And again, you got the opportunity to earn unlimited income per year, tax-deferred or tax-free. Now, we got another strategy here that's really cool that you might not have heard of, and this is called leveraging an asset, also called arbitrage. Here's the way this works. If you own real estate of any kind, it could be your personal primary residence, it could be any other kind of real estate that you own, and you have equity in it, follow this strategy. You can go to your local bank, get an equity line of credit, and have that in place. Now, equity lines of credit right now are stupid low, like in the twos, like 2-point-something%. Now, David and his company are going to pay you a whole lot higher rate of return than 2%. And guess what? Once you got that line in place, you tell David how much you got. He goes and finds you a deal ASAP for you all to do. Then you pull the money down from your equity line of credit that you established at the bank. David's going to pay you a high rate of return. You're going to pay the bank like 2% or whatever, and you get to pocket the spread between those two. And guess what? You can't even measure that return. It's an infinity rate of return, because when you're doing this kind of business and using money this way, you're not loaning your own money out to David and his company for a deal. You're loaning the bank's money out. Is that pretty cool or what? So here's the bottom line on this strategy. If you own real estate and you have equity in it, you'll be sure to want to talk with David in more details about this one-on-one confidentially. Now, here's another strategy that is also called leveraging an asset or arbitrage, like we just talked about on a equity line of credit. Let's say you own stocks. Let's say you like your stocks. Let's say you own mutual funds. You like your mutual funds. Let's say you don't want to get rid of your mutual funds or your stocks. You like them. Well, guess what? You can leverage that asset using arbitrage the way we just explained on using an equity line of credit. If your stocks are at a main brokerage house, all the main brokerage houses have this thing called a portfolio loan account. You just call up your stockbroker or your representative where you got your stocks, and you say, look, I want to open up a portfolio loan account. Now, this is not margin. That's very different. A portfolio loan account. Well, guess what? There's no approval process. You're already approved. you can get up to 50% of the face value of the value of your stocks right now. So you get that set up. Don't pull any money down until David tells you he's got a deal to do. You'll let him know up front how much of a line you can get. And again, it's going to work just like the equity line of credit. David will pay you a much higher rate of return than what portfolio loan accounts charge. Of course, right now they're in the 2s. And again, you get to pocket the spread. So if you have stocks and you like to leverage those and you want to keep them and you want to leverage those stocks, then you'll be sure and want to have a conversation with David about this after the webinar. David, let me turn it back over to you for you to give an overview of how exactly your private lending program works for your private lenders.
Okay, good job, Jay. You sounded good, brother. All right, so let's just start with the interest rate. I pay 2 interest rates, 8% or 10%. That really depends on your position. So if you're in the first position, first mortgage, we pay 8% interest. And if you're in the second position or junior position, we pay up to 10% interest. All right, that's simple interest, by the way. We talked about protection and safety. Well, that's because of loan to value. We don't borrow. I don't allow my lenders to loan any more than 75% of after repaired value of the property. Meaning that, say, if a property is worth $200K, 75% of that is $150,000. So I would not allow any lenders to loan any more than $150K. That way, you automatically have a built-in 25% equitable position, as what we like to call a cushion. Okay. Now, as far as term, if you're using liquid funds or investment capital, money that you need to get back rather quickly or sooner than later, we have a 2-year term. So we try to get your cash out within 2 years. But if it's your retirement fund and you just want it to grow, we have terms where we last up to 5 years. Okay, so the 2 years or 5 years, those are our terms. And then payments, we're really flexible there. It depends on you, the lender. Some people want to get cashed out once we sell the property. Once again, that may be 2 years or 5 years, depending on how long we hold on to it. Some people may want to get annual payments, interest payments. Some people may want semi-annually. We can do quarterly payments or even monthly interest payments. It really depends on you. The main thing is that it's interest only so that we can keep your full principal fully deployed, fully engaged, and working for you, right? I tapped on early withdrawals earlier about an emergency. Once again, if you need your money, for an emergency, just give me a 90-day notice so we can get that done for you. Also, I like to try to give you a minimum return. So let's just say the market's really hot. Let's just say that we get a deal and the property is sold and we're done with it, say, in 3 months or 4 months, really quick. Well, as a way of saying thank you to you, what I'd like to do is I'll pay you at least 6 months of interest. All right. So because I want to thank you for trusting me. So what we do is if we sell the properties really quick, we will make sure that we pay you a minimum of 6 months interest, and we put that in writing.
Excellent. Now, let's go ahead and answer the question, how are you protected as a private lender doing business with David? Well, as we mentioned a few minutes ago, David is not going to be borrowing any unsecured funds from you. He could, legally. He could just sign a promissory note and have the terms in the note, and you loan the money directly to him. Well, it's not working that way. You see, here's the deal. Every note, every deal, every investment that you do with David is going to be backed by the real estate that he's buying with those funds. So, not unsecured, every note is secured, and this gives you the legal right to actually foreclose on David and his company if he didn't pay you. Of course he's going to pay you because he don't want to lose the house. But if you got the house, you make more money than the interest, and he's going to be paying you insane high rate of returns. So this is very, very important to us in the private lending program to where you've got that security and you know that that note that you've invested with David is backed by the real estate. Now, is David concerned about not being able to sell a house? Well, the answer is no, for the same reason I am. Right now, as we said, it's a hot market. I mean, properties are flying off the shelf. And since we're buying them at such low discounted prices, We can even discount prices and sell them if we need to. Again, in a slower market, we sell them on rent to own, so we never worry about getting stuck with a house, and we never have been. So, David, how about take a moment and tell folks where they send their funds and, as importantly, where they do not send their funds?
Well, number one, you do not send the funds directly to me. That's a lesson that I learned a few years ago. I did a private lending deal with a fellow investor, and I gave them the money directly, and it did not turn out good. I'll leave it at that. But no, with me, what you do is you send the money directly to our real estate attorney's trust account. So if we're doing deals in Florida, I can give you that contact. We deal with a real estate attorney and title company in Florida. And for our Georgia deals, we have a good attorney right here in Marietta that we use. So those are things we'll get. So if you decide to do business with me, we will make sure that you get those wiring instructions so you can send them directly to the attorney. That way, the attorney has a paper trail that's safe, and I do not touch your money at all.
So, David, how about tell your guests here on the webinar, do they incur any kind of cost associated with doing business with you?
No, sir, not at all. The good news is that the closing costs are paid by me. I cover all your costs, so there are no extra fees or anything like that. I cover all closing costs, Jay.
So what you're saying is when you borrow money for a deal from one of your private lenders here, nothing comes out of their investment with you, and they know exactly what the rate of return is going to be on that deal, right?
Yes, absolutely.
Exactly. All right, folks, here are the documents that David gets on every deal, and you get copies as well. So on every private lender deal that David does, first of all, he gets a proof of value. So he's either going to get a proof of value through his local realtor in the form of a comparative market analysis. If it's a larger deal, he's going to get a after repaired appraisal. And obviously he's going to get that because he's going to get that before he actually closes on the deal to make sure the numbers are straight and in line. The promissory note, it just lays out the terms of the note. In other words, who's the lender? Well, that's you, David's private lender. Who's the borrower? That's David's company. What's the principal loan amount? What's the property that is securing that note? What's the interest rate? What's the frequency of payments? What's the length of the note? It's got the 90-day call option in there in case you have an emergency come up and you need your money back. Then, of course, you're going to get the original recorded deed of trust or mortgage, one of the same documents, and that is the legal document that backs that note with the real estate and gives you the right to foreclose and protects your investment. Then on the insurance policy, you, as David's private lender, will be named on each deal on each insurance policy as the mortgagee. You're the mortgagee. Now, what that means is that in case there's a total loss on that property, guess what? You, as the lender, get paid off first. That's right. Private lenders, on the insurance policy, if there's a total claim, you get your loan paid off first, and then whatever's left over goes to David's company. Then on the title policy, you are named as the additional insured in case there's any title issues down the road. David does not prepare this paperwork. He does give the instructions to the real estate attorney, but it's his real estate attorney and closing agent and title company that handles all the paperwork to make sure everything is done exactly correct. So what's your range of investment to work with? Well, David uses larger amounts to purchase properties, uses smaller amounts for rehabbing properties. But again, you would have this confidential conversation with David after the webinar, and you all could get into those details. So how do you move forward? Well, the very first thing you do on moving forward, which is not on this screen, is you get on the phone with David. And there's quite a few of you here on the call. And, you know, it's sort of like first come, first serve. It's like you get put in the queue. The next deal David has, first person in the queue gets that deal, second person in the queue, and et cetera. So get on the phone with David. Talk about your situation. Is it investment capital you have? Is it retirement funds? Is it both? I have some private lenders that do both. Do you want to explore that arbitrage and leveraging assets that we talked about with equity lines of credit, et cetera? So if you've got a retirement fund, So David will help you with the self-directed IRA company move those funds over if you're going to be using those funds. And then you just give David a verbal pledge as to what you got to work with. David is going to go find a deal just as soon as possible for you all to do business, and then he will schedule closing with the real estate attorney. It's very, very simple. And so, David, I'm going to turn it back over to you and see if we've had any questions submitted in the question box. And yes, we do have some questions, David. So, David, if you're good, I'll read these questions out.
Sure, go for it.
Okay, so James is asking, does any of the deals have multiple investors investing in the same? And Lisa, I'm going to need your help. On my screen, this entire question, part of it is cut off. So can you read that question from James? It says, do any of the deals have multiple investors investing in the same something?
In the same property.
Okay, excellent question, James. And David, you want to answer that or me?
Yeah, I'll answer, Jay.
Okay.
Yeah, the answer is a resounding no. That's called pooling, and we do not pool. Just think of it as one deal, one lender. Okay, so there's no pooling of resources. We try to keep it simple because that's when it can get messy if you have multiple lenders on one deal. Now, if I mentioned the 75% in first and second position. Let me clear that up. Now, let's just go back to that $200,000 property. Let's say that we needed $100,000 to buy that property. James would be my lender for the $100K. He'd be in the first position. But let's say that property needs some repairs, about $35,000 worth of repairs. Well, then I would get maybe $35,000, say from, I think Patrick's on the line. He would be in the second position. But even still, that's same property, same deal. One person's in first position, the other person's in second position, and they're both protected because the total amount that I borrowed is still way under 75%.
Yeah, and you brought up a good point there, David, when you mentioned pooling money. All that's talking about is like a fund. So like David nor I, we're not raising money from private lenders to invest in a fund. So what it means is whenever you are doing a deal with David, you have your own promissory note and you have your own deed of trust or mortgage. And the key is to keep everybody protected. If there is more than one private lender, then we add the total loan amount and divide it by the value of the property so we still don't exceed the 75%. All right, we got quite a few questions here, David, so let's plow forward here. Antoine, or I don't know if I'm saying that name right. Am I saying that right, Antoine?
Yeah, Antoine, yeah.
Mm-hmm. All right, so tax reporting requirements, question mark. You want to answer that or me, David? Tax reporting requirements.
I'll let you handle that one, Jay. We'll tag team.
All right, very good. So here's the deal. It depends on where your funds are coming from. If you're using retirement funds, then David doesn't even have to send you a 1099-INT, which stands for interest, because those funds are not taxable, all right? However, if you're just using liquid capital, then that interest you earn will be taxed at the ordinary interest rate. Antoine's also asking, how do we find properties? Well, Antoine, we got about 55 different ways that we find properties. I'm going to leave David to answer that question confidentially with you offline. Antoine's also asking, how is this different from notes sold on lendingclub.com? I don't know, Antoine. I've never had any experience with the lendingclub.com, so sorry, not qualified to answer that. Timothy is asking, 90 days seems like a long time to have to give notice if you're experiencing a true emergency. Is there any flexibility in this time on the amount of time? So, Timothy, I'll answer that from experience. Typically, if we're needing to replace your funds and you've got an emergency and we need to replace those funds with another private lender, quite honestly, most of the time we're going to be able to do that within 2 to 4 weeks. But just, to make sure we're not under the gun. That's why we put the 90 days in there. James is asking, how much is required to invest? Is there a minimum amount? David, do you want to answer your minimum amount here with everybody, or do you want to handle that one-on-one?
I'll put it out here for everyone because I'm sure others may have that same question. Thank you for asking that, James. For first position, which we use to acquire properties, since we're dealing with two really good markets here in the Panhandle of Florida as well as coastal Georgia, for first position, we have a minimum of $150K. So $150,000 is for first position. That's at that 8% rate. And for repair or rehab, we have a couple of tiers. If it's a pretty house, we just need to do a polish. Well, I'll just give you a range. We'll just say $25K minimum for the second position.
Excellent. And I'm glad you went ahead and answered it, David, because you got like 4 or 5 people on here asking the same question. So excellent. Randall asked, and we ended up answering it in the presentation. He just asked it before we got to it. Randall's saying, what is an insanely high rate of return? And as David went over, it's either 8% or 10%, depending on the deal. And the reason we call that insane is because it is insane. And here's the deal. The average 12-month certificate of deposit, as we said, is paying 0.17% across the nation. That's less than 0.25%. When David comes along and pays you 8% even, that's like more than 32 times as much money that people can earn in the local bank. David, that covers, I'm just double-checking, that covers all the questions. Let me just double-check here.
Yeah, I also wanted to tag on to your answer addressing Randall. So, yes, of course, with the comparing that to the stock market, that is really low. But let's just say with the stock market, yeah, we hear stories of, people making 50% returns on home run stocks. But remember, with the stock market, there's volatility. So, yeah, you may be up today in the stock market, but you can wake up tomorrow and be completely wiped out, as we all would know what happened a few years ago in the stock market. So when you take in the fact that when you consider volatility from the stock market, that really negates that. And then if you compare it to traditional items, like we mentioned, the money market funds or the CDs, it really is an excellent rate of return. That's secure and safe, where you can sleep at night. That's why we call it stress-free investing, my friend.
Excellent. Fred's got a question. Fred is saying, in the case of an emergency, if you can't find a replacement investor, what happens then? Well, I'll go ahead and answer that, David. First of all, since David and I work together, I got 47 of them out there in the wing, and I've always got money sitting on the shelf. But in addition to that, that's why we have a conservative loan to value. So if David had to go ahead and sell the property to cash out a private lender that had a emergency, then he would just sell the property and liquidate, and everybody would be made whole. Michael's asking, by the way, David, you got people here with excellent questions. These are great questions. Michael is asking, do you know ahead of time whether a second position will be required? And the answer is yes. David will be disclosing to you when he has a deal exactly what position that you would be in. David, that's all the questions I see. I mean, they're just fantastic questions coming in. Michael just asked, how is property tax calculated for the time of the loan? Good question, Michael. Let's say you loaned out, just for easy figuring, $200,000. And let's say that deal was paying you 8%. Well, that's an annual percentage rate, so that is $16,000 that you'd earn for the year. So if the money was employed or deployed for the entire year, that'd be $16,000. If you loaned it from your investment capital, whatever your ordinary income tax rate is, and all of us are in different brackets, but whatever your ordinary income tax rate is, that $16,000 would be taxed at your ordinary tax rate. Again, if the money is coming from retirement funds, then there's no tax reported. David, I'm going to let you wrap it up with final comments. You got a ton of questions here, fantastic questions. Clearly, folks, as soon as you can, to make sure you get in the queue so you're not left out, be sure and get on the phone with David ASAP and have your confidential one-on-one conversations. I see you got here, David, you've got your email address here. Odds are all these people, they've got your telephone number as well. David, I'm going to hand it back over to you to wrap it up.
Great. Thank you, Jay. First of all, thank everyone for taking time out of your busy schedules, your lunch hour to spend it with me I hope we added value to you. And Jay, thank you for taking your time out to help me through this, sir. I really appreciate it. And if anyone has any questions, please feel free to reach out to me. You have my email, you have my cell phone number. I will also be following up with an email later on, if not today, tomorrow. I'll be sending you a brochure that we've done that's kind of like a Q&A in case you get some questions that hit you later on today. I forgot to ask that. But we'll get that over to you, like I said, within the next 24 hours with it's our brochure that has a Q&A on it. In the meantime, once again, thank you all. Have a wonderful day. I appreciate your time. You all are great friends. I appreciate you all. Thanks, Jay. Have a great one. Be safe out there, everybody.
All right. Have a good one. Catch you later.